Good evening, good afternoon, or good morning, I guess, for some of you. Welcome to today's event. This is called the Three-Legged Stool. Actually, it's been longer than usual since my last one. I usually do these not every 2 weeks, not every 3 weeks, somewhere in between. I think it's been like a full 4 weeks. So let's get going for tonight. The Three-Legged Stool, an educational event just for DTS members, Wednesday, August 12th. That's today. You need that little red ball. Regarding tonight's event, this is a big deal. It's not hard to learn, yet many struggle. This may be a best look at some of the reasons why. Again, this is in an ongoing endeavor to try and give even those of you who are here just as free members, which is most of you tonight logged in, a real good view, understanding of how to succeed at this to whatever extent that you can, wherever you are right now in your trading or investing career development. This is all about the three legs or supports that are needed for proper trading investing. It's funny, I didn't realize it till today, actually, that the title may be confusing. Do you know where the three-legged stool, according to, when I Google this, according to 50 different sources, do you know where the three-legged stool little cliche started? Do you know what originated this? I thought this has been around for hundreds of years. I thought it was just grandma had a three-legged stool. You need three legs to stand. If you only have two, you're going to fall. Do you know what actually coined this phrase? Apparently, according to like the top 10 Google hits, it's the three peers of investment, of retirement. I mean, your Social Security, well, they still refer to back to when you had a retirement from a company and your savings. So that actually, I'm glad nobody knows that because it was a little confusing because that's not what this is about. And since I am doing an event about trading and investing, somebody could have easily thought I'm going to talk about those three boring things. I just picked this topic out, gosh, years ago to start discussing what I think is needed to properly learn and understand this. And again, in my mind, tonight we're going to hit on two of the reasons I think people have a hard time sometimes. This is the slide that was sent to you or you could have read before. I'm not going to go over it. Just the basic concept of this is that I've referred to this many, many, many times. In the end of presentations, I left this slide in there about the three-legged stool and referred to it, but I really want to go into it in more detail because some people asked me about it, and I really want to explain what I mean by the three-legged stool and the three concepts of learning and the three concepts of learning to trade properly. This is supposed to be funny here. The table of contents for tonight, leg one, leg two, leg three, is kind of a little joke there. Leg one. Leg one is superior technical understanding. Superior technical understanding. There's two key words in there. One is superior and one is technical. As far as technical, it reminded me when I put that little thing out there that perhaps it would be helpful to start with this, something I've used as the definition of trading for many, 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 many years. I wrote this. This is my definition of trading. Let's read it real quickly just for fun. Trading, and again, by trading, folks, understand, I mean all time frames. I mean, if you're a long-term investor, to me, that's long-term trading. It implies that you are using charts to enter and to manage positions. We're not using crazy fundamentals. We're not using news or hot topics. We're using the truth in the market, the only truth, what actually happens at chart. Using technical analysis. So it starts off with that. There is no other concept to me of trading or investing. And I don't care even if you're long term. Even if you're looking weeks, months, years, it's not about fundamentals at all. It's not that they are necessarily wrong, but they are built into the chart. And the chart is something we can read. We cannot read or understand fundamentals. So technical analysis to find a moment in time, that term has been around with me for a long time, when the odds are in your favor. And that's what charts are all about. They're not about magic, they're not about certainty, they're about looking and constantly scouring for that moment where the odds are significantly enough in your favor that it's worth it to take a trade. Then it becomes a matter of entry and management. In other words, it's having the knowledge to know when the odds are in your favor, having the patience to wait for that moment, and then having the discipline to handle the trade properly when it goes in your favor and when it goes against you. That's it. I mean, it really is that simple, isn't it? What in your view is probably the hardest word in there. There's three capitalized words that to me are really the whole secret. And they pretty much line up with the three legs. But what in your view is the hardest word in there? Dave says knowledge. So knowing, getting enough knowledge. And like this first leg says, I actually phrase it superior knowledge. And there's very much a reason why I did that. We're going to talk about it. We're going to go through each leg, of course. Discipline, patience. That's why I asked, because I kind of figured you guys are exactly split so far in the three concepts. And you're all right. It probably depends a little personally, but at least I want you to really think about this. And if nothing else, get out of it tonight maybe where you need to focus. All these are very manageable concepts. There's nothing on the screen here, right here, that any one of us over the age of 12 couldn't learn to handle properly if you're not. There's no incredible secret or difficulty to it. It's just a matter of doing it. Superior technical understanding. That's the title up here. Superior technical. Why superior technical understanding? Well, that's what this first section is going to be about. What does that mean exactly? We know technical analysis charts, but the word superior I keep throwing out there. And I think, to me, this is one of the first big hang-ups, and this is something you've heard me talk about. And that is the difference between what I sometimes, well, I have a lot of jokes for this, but what I call, the Cracker Jack box of technical analysis, where you get that little book out of the bottom of Cracker Jack, and it's how to trade charts. That's what some people use. But why superior? Well, it's just simple to me. Would you jump out of an airplane with a minimal parachute? I mean, if you're going to go skydiving for your first time and you had to go to the parachute store, wherever that is, and buy a parachute, would you go for the one on sale? Would you go for the bargain brand? Probably not. If your car that you bought had an option, a choice between getting the best seatbelts available, or you could save $200 in your car and get these other seatbelts that are hand woven in a little village in some foreign country, what would you go for? I mean, you probably wouldn't want to use a cheap parachute, nor would you want to use a not so good airbag or seatbelt. Why people, when they come to a new career, for some of you, to trade for a living, or when you come to make the decision to spend the time and effort to make extra money, just extra income, or to manage your own portfolio, why we would all of a sudden decide to go as cheap as we possibly can, I don't know. Sometimes it's human nature, but I think it's the wrong time to do that, the wrong place to do that. I know you're on a roll, but the challenge is the leg that is most subjective, and that is definitely taken. Well, when I'm done, I might change your mind. Matter of fact, that's the purpose of tonight. Actually, one of the big goals for me tonight, I think, actually, believe it or not, ironically, miraculously, is to change the mind of what you just said, because I think that's a prevalent thing out there. I think that's a prevalent thought. That technical analysis has some issues because it is subjective to some extent. And what I'd like to show you tonight is that can be hugely minimized because of the other two legs. Oh, by the way, that definition trading I gave you, I forgot to give this out to you. It's from an article. I thought it was on the website, but actually it's not. It's a two-part article about what is trading. You may want to read it. It goes into more detail, and it wasn't the subject of tonight, so I didn't do it. But those links should give you some PDFs that are a more expanded view of that, but that wasn't what tonight was about. So, superior technical understanding. If you have seen advertised in your email 5 simple strategies that work every time, harnessing the power of options. I was not allowed to reveal this pattern to you until today. These are real email titles. I have like all of you, I have a few email accounts, and I have one that I just get signed up to anything and everything. And I've got to tell you, I'm being somebody that's been doing this a long time and successfully teaching a lot of people. I get embarrassed by some of the junk I see out there. I mean, this stuff is crazy. It's not what it's about. And actually, these are all sales lines, to get you to click or to go somewhere or do something and get involved with something. But technical analysis has nothing to do. I hope all of you, I think everybody listening to me, if you're even here, if you're even interested in listening to me, you probably know it's not about some magic pattern. It's not about some magic formula, some secret indicator or anything like that. If it was that easy, everybody would go out and do it. We'd all be rich and nobody would be poor and it'd be a wonderful life. These are actually all embarrassing comments to me. What I was going to say was back about jumping out of an airplane with a faulty parachute. Whatever business you decide to go into, you want the best tools at your disposal. Most people would agree with that. You want the best tools that you can have. And your tool in making money in the market is number one, is a superior understanding of technical analysis. Superior technical analysis, next slide. Here's where I want to make some distinctions. If you've ever been told you need a 3-to-1 reward to risk, look to the left for the answer to the question about support or resistance. That's your total answer. A topping tail is bearish. Look for the hot stocks every day. These are most likely rookie comments. I originally put these are all rookie comments, and obviously there's a little truth in everything. But these, for the most part, are comments that simply fall way short of what we need to be able to do to have a good technical understanding, at least to the superior level, to make money. Each one of these, I'm going to talk about the 3-to-1 reward to risk in the next section a little bit. A lot of these sections kind of overlap. Let me talk about one here, for example, looking for the hot stocks every day. And again, I am somebody that fully believes that if we all have to learn how to read charts, what the language of charts is to make money. And once you do that, there are a variety of ways you can go. A lot of people have this conception that, like anybody that I train, we'd all be sitting there. Well, in the room, I'm looking at what I'm looking at, but if there were 20 people just going off their own way, they'd all be looking at the same chart at the same moment in time. That's not what it is. You learn a tool, and there's a lot of different ways to make money. And certainly people could adapt to making money from chasing some really hot stocks if the chart lines up right. But for the most part, people lose doing this. And this is where some of you maybe will perk your ears up and say, yeah, maybe I should listen to this guy because I've been having a hard time with that. There's a misconception out there that in order to make big money, you have to have this big move, and therefore you have to get these really crazy stocks, and more and more and more. I get people emailing and asking me about this biotech stock and what do I think about this, and do you think this will go from 20 to 50 in the next 3 days? And that has nothing to do with what we do as traders, investors. Now, there's a little sideline you can do, and I'm not opposed to this. I've said it before. I almost did it myself. I said 3 months ago that I wouldn't mind picking up an airline or something, a cruise ship way off the bottom. There's a little technical analysis in that, but that's not what I normally do. And if you want to find the biotech that's going to cure the coronavirus, that has nothing to do with technical analysis. I mean, if you just want to go out and throw some money in some biotech stocks, take a little account and do that. And like I always say, if you go to Chili's and you didn't like the dinner, go short Eat or Brinker, whichever one it is. If you didn't like your meal at McDonald's, go short McDonald's. If you have these personal things you want to do, that's fine. But you do not have any kind of superior knowledge just because you read an article. I think most of the world knows that there's a coronavirus. Most of the world knows that there are stocks looking to find the cure. Unless you literally live next door to the scientist who's discovering the cure, don't talk to me about what you know about biotech stocks or anything else. That's how everybody loses all their money all the time. Agreed? And again, I'm not saying you couldn't have made some money. As a matter of fact, you can almost pick any biotech you want at the right time. But I'm just saying, I talk a lot about lately about the test of time, longevity. I've seen so many people, they come in with these hot ideas and they're around for 3 months and then they're gone. So yeah, great. That's not a way to make money permanently. There were many times in the past that if you would have done something similar, you would have lost your shirt because nothing ever happened from it. Like back 10 years ago with the swine flu, those were mostly all flops. This time they went better. But again, you're betting on an idea for the most part rather than reading a chart. Now, yes, there are charts that make sense in this area. But what I'm saying is your focus doesn't have to be simply, hey, what's the hottest stock in America? That's what people like to do. I'm the opposite. I want to make my money boring, just doing what stocks do every single day of the week. The example is today. This is GM. This was a short from today that I entered right after the open. This was the 60-minute chart of GM going into today. You can look at your own daily chart if you want. It's not all about the strategy. It's just simply saying that all the stock did today, and I didn't get this part of it. This is what it did today at that moment in time. And I'm going to show you now the 1-minute chart because it was an early morning trade. This is the end of yesterday. And all I did was get this. That's all I did. Inside yesterday's trading range. I didn't get the bigger part of that move on GM. I just happened to, because it dropped so quickly, I guess got nicked out of that by just a little bit. But yeah, that's a 1-minute chart. I got down to here. My second exit was down in here just around 10 o'clock. But it actually went much lower, you saw on the hourly chart. That's just a normal move. And with precision, you can make as much money as you would in any other stock. I mean, this particular stock, it ended up with, what did I have on this? Like a 20-cent stop. And it dropped 30 cents. So it's 1.5 hours. You size that to the amount of money you want to make, and you make your over your day's goal just with that. Now, sure, you could show me a $20 bio stock that went $5 today. But here's the problem. Number one, you probably needed a $2, $3 stop. And number two, because they're so crazy, it probably stopped you out once or twice, or you got your stop even wider because it stops you out so much. Now, again, if you're making money doing that, that's great. That's the bottom line secret. I'm talking to anybody who's struggling and thinks that the secret is to try and find a stock that moves 20% every day. That's not is what's needed, and it's also much more difficult. Leg one, make your money on what stocks do every day. Leg one, superior technical understanding. The summary of this is simple. Technical analysis works and works very well. It is the way to make money in the market for 99.99% of anyone that is listening to me. The problem is that it is a circular process for me to get you to understand just what superior technical analysis is. You have to embrace it, fully understand it, and then you look back and realize. You then see it as clear as day, and you know why you may have struggled. It's not hard to learn. It requires the intellect of the average fifth grader, but you do have to learn it. It does not just appear by osmosis. And when you learn it, you must be aware of the other two legs of the stool. No stool stands on two legs, let alone on one. Most traders try to make money with only one leg, and it is usually a very weak leg at that. The one leg I'm referring to is just a very average understanding of technical analysis. I say even right on the front page of my website, down to the bottom under a section called Warning, that if you make a moderate attempt, like you would maybe in a lot of other fields, to learn technical analysis, you're going to learn just enough to lose money pretty quickly. Because it's that last bit you learn that makes the difference. It makes all the difference in the world. So it's really important that you get the full total understanding of leg one, which is superior technical analysis. I'm going to go on to leg two, and then when we sum up, we can talk about this a little bit more. Leg two is going to be math and probabilities. It's probably the most overlooked leg of the stool. Some questions. Let me ask you guys a question. What reward to risk is needed to take a trade, everybody? You're about to take a trade. You have your parameters set up. You know where you want to get in, hopefully. You supposedly have some stop in mind. You think what reward to risk is needed to take a trade? Back on the slide about rookie comments. We're going to spend a little time on this one here. I said I made the comment up there that if you've heard you need 3 to 1, that's kind of a mostly rookie comment. Well, don't get me wrong when I start talking about this. Nobody more than I would like to have a nice little focal area of entry and the ability for the stock to run a lot. But to narrow yourself to a certain reward to risk is not just wrong, it's just downright silly when you actually think about it. I'm going to go into it on this next trade example, and we're going to talk about it quite a bit. But it simply is illogical to focus on that, and it's actually a mirage in a sense, and probably causing bad trading for you for a lot of people. We're going to look at the next trade in just a second here. Math and probabilities. Could two talented traders disagree about when to enter a position? Is that possible? Could you have two good traders disagree about something, even using the same technical skills? Yeah, they sure could. And this is probably what Fire Tower was maybe referring to. That if we learn something, shouldn't we all always agree? I mean, if we're architects and engineers, there's probably not a lot of disagreement. I imagine there's still areas they would disagree, but for the most part, if you're an accountant, well, you know what? Even accountants, right? There's huge disagreement among accountants, right? There's different legal ways to account for something. So everything has this to some degree, really. Wasn't really the direction I started going with this, but the truth of it is, I mean, any occupation, no matter how well you know it, the professionals, the best in the business, can disagree on how something's done. And certainly in technical analysis, it's possible because the truth of it is that there is more than just a technical pattern involved in the decision. And I don't mean anything like fundamentals. I mean the other two legs of the stool are the other two things that are involved, especially this leg here, the math part of it. And we'll get to that in just a second. Could they disagree if the position should only be entered? Is the chart the only thing that really matters? No, it actually isn't the only thing that matters. This gets into the concepts of what I keep referring to about a moment in time. Um, you know, I don't mind taking the bullet for that trade, things like that, where, and probably the ultimate saying that really sums up this section of what I'm talking about, which is trading is not about being right, it's about making money. And I know that that concept's a little hard for you for some of you to digest. Let me run through and give you some of the fallacies about reward to risk. And again, trading's funny because it kind of goes full circle. You start off learning, and you probably even had no idea on your first days about entry and stops and targets. And then you learn and you get educated and you read and you think you're reading the most advanced stuff, right? And all of a sudden you'll learn about, boy, here's my entry and here's my stop, and I got to find a target. And boy, it better be 3 to 1. Boy, now I've really learned from the pros. And then you go first, and then you find out, you know what? That's not really the pro level. That's kind of that's the kindergarten level. It really is. It's just kind of like running through the numbers. It's what's in books. It's what people write because they don't really know what they're doing. And hopefully, I'm going to make my point. This, by the way, I know I don't sound myself tonight. And, and the reason is this is a hard topic for me. I don't know why. It's why I've put it off, because it's so clear in my head, but it's one of these very, very difficult ones to try and explain properly. But hopefully, when I get to this chart, it's going to clear some things up for you. So here is a chart from BMY. This is a 60-minute chart. And this was a trade from Monday. So this is 2 days ago, but it's a great example of what I want to show you. So I'm going to actually use this to kind of run through all 3 legs. The next leg is going to be psychology, right? We talked about leg 1, superior technical analysis. Leg 2 is math and probabilities, and leg 3 is psychology. This is a 60-minute chart from BMY on Monday, and this is what it looked like before I did the trade. And there's the daily chart over here just to give you some view, because I want to talk about targets and stuff. And if you have charts up and available, you might want to pull up your charts and look at BMY on Monday as I ask you some questions. So this is on, and you can see here's the trade numbers down here that I did on Monday. This is entered later in the morning for me. This is like kind of as late as I do something, typically 11, quarter to 12. And this is the bigger strategy is what I called it a gap carry. That first column there is what's the strategy and what's the entry here. And again, this may not make sense to you, but I divide up my trades mentally. There's not like a strategy that has an entry. To me, I teach and I do, they're separate things. There's a strategy. There's the picture of power, I call it, the strategy. Why are you even getting in this trade? What about this trade makes you think it's going to go higher? Well, this is in the general thing I call the gap carry. And what that means loosely is it was a gap up stock from a day or two before that I felt was bullish enough or bearish enough to keep around, because these gaps don't always move on day one. As a matter of fact, by far and away, my favorite time to play a gap is on the gap carry list. Matter of fact, I've done that more this last 5-6 days than usual even. But because of the nature of gaps, a lot of times there's a lot of bullishness sometimes in the gap, but there's also sometimes a gap like this will bring in a lot of selling sometimes, because you can see there's people all through this pattern. Well, if you look on a daily chart, there are people all through here that might be wanting to take profits. And it also had been in a prior downtrend, so you have a lot of profit taking here, but yet it was a very powerful gap. So you have this little, immovable in unstoppable motion meeting an immovable what? Unstoppable force meeting an immovable object, and you get the stalemate. But the stalemate should break in the direction that you think. And if you got a great entry, here we go again, where I'm not playing BMY this day to go to new all-time highs, which is what so many people try and do. They're always going for the home run, trying to find the day BMY is going to break out on a new 6-year high and make money, and it's a low odds event. How about taking it from the bottom of this range to the top of this range? That was the general idea. So the power from this, the reason I was looking at it, because it was a gap carry, and then specifically kind of blending into the entry strategy was a 60-minute buy setup at major support. I call that major support the way I define it. So it's a 60-minute buy setup. And then I ended up coming down to find an entry on a 5-minute chart as a 5-minute breakout actually. Now, I don't normally do a breakout as a strategy, but a breakout as an entry to another strategy, I will. So there's a 60-minute chart. Now I'll show you the 5, and then I want to come back and I want to ask you a bunch of questions here about reward to risk and all kinds of good things like that. So here's the 60. I end up, you can see the numbers down here is 2 halves, and the second half went basically end of the day, 3:30, because it really surged at 3:30. So here comes the entry. So again, just to show you where we're on this day right here, and right in here somewhere, after 11:30, the 5-minute chart looked like this right in here. Okay, so I have this chart at the beginning of the day because I saved it on my gap carry list. When I look at all my lists for that morning, I see BMY go back looking like this on the hourly chart. And I say, okay, I want to look at that today. So I put it on a chart. It didn't do anything to get me excited because you notice it already had started up that prior day. So it wasn't clear where I would want to get in. But then I look over here, I actually left for a little bit, came back and look over and say, wow, it's on my screen. There's a chart. There's a nice little consolidation inside of a stock that I consider to be a tier 2 bullish gap. And after it already came off hourly major support. I now have all these things coming together, so I get the odds in my favor. So I came in here and I took the entry. You see that green bar right there? And again, you can look at your own charts. I took the entry on, I think it was exactly 3 cents off the low of that green tail right there. Everybody see that? Now let me ask you something. I think a lot of self-proclaimed good traders would call that a stupid entry. Why would I take an entry there? It didn't break out yet. Why would I do that? This is where we're going to spend a little time on this chart because I think there's probably the third part is going to be more of a referral. A solid base. Yeah, but what if it went lower, Ron? What if it went lower? And why not wait for the breakout? Why not play a breakout? Those are cool. Why would anybody jump into a pattern just in the middle of nowhere? Just okay. And why there? Why literally? If you look, my entry was, my threshold was over 6105, and I think the low of that was 6102 or something, right? Well, actually, Glenn, I put my stop down at 6070. That's way down here somewhere. Matter of fact, I can't even see it. My stop was at 6070, and that makes even less sense. See where my stop is? This is not a terribly volatile stock, so 30 cents is pretty far away. So that's right in there. So the stop is right down there. I'll put a little arrow. So here's my stop down here. Well, the reason I jumped in there, are you ready for this? Because of superior technical understanding. What does that mean? It means I know this is going to break out. So why wait for it? Now, when I say I know it's going to break out, would I bet my right arm? No, I wouldn't bet my right arm. Would I bet my house? No, I wouldn't bet my house. I don't have to bet any of that. You know what I have to bet? I have to bet one risk unit. See, trading is about odds. It's not about certainties. And when you get to know patterns, and again, when I teach this in class, I teach 2 totally different, distinct types of entries. And by the way, the 2 entries I teach are not even what's taught, and you go 90% of the places. The entries are middle of the road entries which don't do the job. But this is one of the entries that I would teach, which says, why wait if you know it's going to happen? Now, again, here's that circular argument. You have to know it's going to happen, right? You have to have good enough chart knowledge to say, that is going to go higher, and I'm willing to bet on it right here. Now, why not earlier? Well, earlier I wasn't sure. See, my reason I waited on this was because I thought we may come down and retest down here. So at a certain point in time, from my chart knowledge, I began to realize, okay, you know what? It's going to go higher. So I then I decided right here that I wanted to be in this. And my hope was that it didn't break out right then, because I would probably miss it. I don't chase things. So when it dipped this time, I took the dip as it started to reverse, because I thought this would be my last chance, right? What about that 500 gets you in even after the bearish wide range bar? I don't see a bearish wide range bar in here. That bar is like 6 cents. This is a fairly tight base fire tower. I mean, just keep it in perspective. You're talking about like a 10-cent bar or something. Here's the hourly chart. Yeah, it's just nothing. I mean, that's just, you could cause the selling to make that red bar. You know, it's just a nothing. So what I got in, great. And then I didn't get the low, but notice how close I was to being right on. I mean, a few bars later, that was it. Now, do I know if it's going to run right here or wait to there? Or, no, I have no idea. But there comes a point in time where, you know, based on your superior chart knowledge, you have to make a decision. Now, I could have missed it by waiting that long. It could have gone before I got in. It ended up going just, but notice also where my stop is. My stop is down here. So do I care that it does this? Not at all. So I have a 30-cent stop. And let me ask you something. Here's the daily chart. Where's my target? What's my target on this? What's my target and what's my risk reward with a 30-cent stop? Go ahead. My target, what's my risk reward? And sometimes this can frustrate somebody new in the room. I remember somebody asked me one time, because I very clearly discuss these plays ahead of time, and we discuss entry and stop. And at the time I enter, I don't give a target at the time I enter. And somebody asked me once, why not? I said, well, look, if you're following me, if you're doing exactly what I'm doing, you just got to trust I know what I'm doing, because I don't necessarily know my target. Why do I not know my target? Well, one reason is because it depends how it gets there. Think about this a minute, guys. This is just kind of common sense, right? It depends how it gets there. In other words, do I have the right chart to show you here? You have to squint your eyes a little bit. From right here, let's say we immediately flew right to that prior day's consolidation, right? It just gets there in 5 minutes. Guess what? I'm taking some money. I don't care what the target is. See, when I get into something, almost anything I do, I know one possible target is just hang on to it. In other words, anything I do has the possibility of running either all the way to yesterday's higher low or even higher, and it has kind of an all-day possibility most of the time. Sometimes in the morning, I'm just looking to get something to the high or the low. But on something like this, what difference does it make where the target is? I mean, I have a gapped up stock that could go to new highs. It could challenge the prior highs. All those targets are great targets. I don't really care. So if it grinds its way higher, so think of all the different things that are, to me, involved in getting to the target. I'm going to start drawing here all over the place. And you know what? Let me just do that. I think it'll make the point clearer. So I get in somewhere, right? And I get long. And here's different levels over here. Boom, boom, boom. Different, just different highs, whatever it is, right? So I'm thinking I'm going to get all the way to here. You with me? By the end of the day. Great. It's 11 o'clock, and in 5 minutes, I get right to the first resistance area. Guess what? I'm going to take something off the table, a third or half. I'm just going to, period. I don't care what the target, I don't care about anything else. Because it's what I call the free money. I've literally made my whole day's goal in 5 minutes. I'm not going to just let that disappear. And I don't think I'm at all a chicken trader. I'm not saying you should take quick profits. I'm just saying that it's all relative. And let me show you what I mean by that. What if this happened? And let's say I was thinking this should be a target area for half. What do I do now? I come up 10 cents short of my target. and I'm consolidating. What do I do now? Yeah, exactly. I'm going to raise my stop to some level. So now the trade is either a reduced loss or even or up. And now I'm going to raise my target somewhere. It depends how I get there. That's going to influence my target. So I always have an area. I always talk about hand grenades in trading, not BB guns. I have a hand grenade area up there I'd like to get to, but depending on how I get there is going to depend on what I do to manage it on the way up. And at some point then, we start getting into noon or whatever. You know what I do psychologically? What do I do psychologally to help me manage to get all the way to here? Because BBY went all the way to there. It just went up all day. How did I manage to get BBY all the way there? You're not going to like this answer, some of you at all. Yeah, I left. I left. Went out, had some fun. Yeah. Went on a bike ride, went shopping that day, I think, got a few things I needed. Best way to make money. Now, I've had people say, "Oh, Paul, you can't do that. You got to sit there and manage it." Well, why? What am I managing? Do you realize that most of you listening to me, and I'll include myself in this for the most part, if you sit there, you're probably losing money sitting there. In other words, you're managing yourself to less money than you'd make if you just let the thing go. Now, that depends. You got to be a decent trader, right? I mean, if your stocks, I mean, this is one of these little tips I sent out. If your stock goes from point A to point B, listen to this comment carefully because it's kind of scary. If your stock makes it to the target, anything you do along the way to manage it is costing you money. True? Is that true? Now, I'm not saying you don't manage intelligently, but most people way overmanage. So good traders who frequently get to decent targets should let things go a little bit more. Now, the opposite of that is somebody who stops out of every trade. And they can make the argument, well, Paul, I got to watch this thing because I need to raise my stop and reduce my loss. Okay, if that's where you are, if your trading is all about reducing losses, have at it. And you keep those losses small, and you can sit at that desk for a year instead of 6 months losing money. That'll be even better for you. Right, fire tower, exactly. It's a little beyond where I'm going to go right now but that's absolutely true. So let's talk about another part of this whole thing that nobody even begins to think about, right? And this is like, again, I'm getting into like more advanced seminar type stuff, so I just want to mention this stuff. But once I'm up here, you know what else I can do? Anybody figure this out? Once I'm up here, what else can I do with this trade? It's all involved in the reward to risk, but yet nobody thinks about it this way because you know what it is? It's math and probabilities. I had to do a lecture about this sometime. What can I do when I'm up here? What's another option I have to do? What's another thing I can do? We actually break out, in other words. I got in way before the breakout. I can add and reduce, yeah, absolutely, but just take the first step of it. What? Why can't I just raise my stop now to the bottom of the base where, every other Joe would be doing? Once I'm clearly above this, right? And you know what now? I only have a half risk on the table. So in other words, it's a brand new trade and I'm fully share sized. I'm going to make 1.5 times my goal by the end of the day, but yet now I have only a half loss possible. Isn't that part of your reward to risk calculation? Yes? No? Isn't that a big deal? It's a real big deal. It's a huge deal. And looking at it the other way, what if right in here, what if I took that with a super tight stop? I'm sorry. What if I took it with a super tight stop right in there and it actually held? That trade could have made a week and a half's worth of profit. That's another way. Of course, it's going to stop out frequently doing that because they have no buffer room in there. So you see, and these are just some of the considerations and all the different things you can do with this. So once I start moving, I could add. If I came down, I'd have the room to let it not stop out if I wanted to. Once I get up here, I can bring the stop up. I could then add to it if I wanted to. And the whole original concept of reward to risk becomes just a meaningless. The stupid thing of 3 to 1 just becomes meaningless because none of it becomes relevant. And you know what? Everybody who likes the 3 to 1 target concept, let me ask you a question that really shuts everybody up really quick is, fine, you're looking for targets of 3 to 1. tell me what your Sharpe ratio is at the end of the week. In other words, what did you actually take of that target? And everybody's like zero point 0.8, zero point 0.7. Well, you see what I mean though, right, Fire Tower? What's the point of pretending to go for a 3-to-1 target when you're not getting a fourth of it anyhow? I mean, if you're going to do that, let's go for higher odds trades, right? Because you're going for 3-to-1, I hate to tell you, that's a lower odds trade. You're not going to get that every time. So this is what I mean about where math and probabilities, and I'm not talking about like, advanced college, advanced master's degree math. I'm talking about 5th grade math. That's all I'm talking about, right? Yeah, exactly. That's all I'm talking about. But it's a big part of it. In other words, when you look at these trades, and this is what I mean about I'd rather make money than be right or wrong. There are moments where you have the opportunity. Let me show you one. I didn't do this trade. Let me pull up the chart here, but it was just because it was just this morning. It was Casey. I think Casey's here even. Was it Casey that did this? I suggested this. I had something, I was going, I didn't do it, and it was a moment in time. It was a math trade. In other words, let me show it to you, and I'll show you what I mean. Hang on, I'm pulling up charts. But I mean, we run across these all the time, and again, it just starts to get into this issue that I'm trying to drive home, that it's not. Well, wait till I make the point here on the next couple of slides. I don't want to get ahead of myself here. So you have charts up now? Got charts, 4 charts, right? Oh, geez, what was the symbol, Fire Tower? Oh, it was eat early. I'll know the chart when I see it. It was eat. It was eat. So here's eat today. Turned out to be really bullish. But it also, I felt, was initially bearish. And I saw this little thing right in here. And I said, you know what? This is the moment in time trade. Now, we could sit here and argue all day. And I could survey all of you, and I could call in the 10 best traders in the country, whoever they might be. And we could argue all day whether this is a short or not. Right there, whether it's a short or not. But it doesn't matter, because this to me is a legit concept to be short. It has unlimited potential to the downside. And you're talking about this little moment here where it failed to go higher. That's the little moment. So it's not about being right. And this is the point I'm going to get to in 5 minutes, is that your chart knowledge gets you so far. It gets you to this great odds thing. And then that last little leap, it's not about trying to get the chart better and better and better and better. Nobody at that point, nobody's going to tell you if that's higher or lower. We can't read the charts that well. We're reading patterns, but charts are constantly being made and formed and changed. And it just very simply, if somebody 10 minutes before this got a buy order to buy 500,000 shares of EAT, guess what? They're going to make a new chart. And it doesn't matter how much chart knowledge you have. Does that make sense, everyone? So the charts are a pattern, a template that we look for. And we find that template, that's where we come in with good math and then good management and psychology to make the ones work that work. And I apologize, I know I'm only getting about 80% across to you, or 60%, or whatever number you want to pick. I'm normally much better at it, but I just... So BMY, 3-legged stool, math and probabilities. Summary of number 2, math and probabilities. When traders learn charts, technical analysis, the quest becomes to learn more and understand charts better. That's a very good thing. But sometimes the goal becomes to find perfect charts, and they don't exist. They don't. That's a fact. Anybody wants to argue that with me? Just tell them they're wrong. I'm not going to argue about it. And when one of the other legs of the stool is missing, due to that lack of knowledge, when they don't make money, they become obsessed with learning charts better. Does this make sense to really what I'm saying? I'm the first person to tell you, boy, learn those charts, learn the language of charts, and learn it and keep learning it, and you never stop learning. But yet, if you're having a problem, you may be at a level in chart knowledge where you can make all the money in the world you want. But yet, you don't have the other 2 legs to stand on, and that's why you're falling apart. And I see that a lot. I see that with people sometimes. I had a guy that's not, he's not subscribed to anything. I to look at people's trades that they sent to me. He sent me a trade, and I actually got together with him because I had a couple things I wanted to show him. And the one trade he sent me was just the most beautiful trade I've ever seen. I actually thought he was just showing off. But then when I read the email, I find out he lost money on it, right? So I pull up this chart in front of him, and I say, okay, how'd you lose on this? And you know what he says? He goes, oh my God, I never knew the stock went that high. In other words, he took a trade, he stopped out of it for no reason. He just got out in the middle of a move up, and the stock had a record up day. I mean, he would have made, literally, if he would have walked away, he would have made, 2 weeks salary. He never even knew. He never even knew that he had a great trade. So I thought he's showing off to me, and he really wanted to know what was wrong with the trade. There's nothing wrong with the trade. You got out in the middle of nowhere just because you got scared. So if you have those problems, it doesn't matter how well you know a chart, you're not going to make money with the whole thing. Increasing chart knowledge from 80 to 90%, whatever that means, I'm just making up numbers here, is great, but it's fruitless if the other two legs don't even exist. Okay? Now I know you're thinking, Paul, you got 7 minutes left and you're only on leg 2. But leg 3 is going to be a bit of a downer for you because I'm going to mostly defer leg 3. Leg 3 is psychology and or experience. I put them together because they're related. I think experience permeates everything maybe a little bit. But there's a relationship in there between psychology and experience. In psychology, we're talking about, well, here, the reason I'm going to go quickly through this is because I did a whole presentation, Let's Talk Psycho. And you should go listen to that if you really are interested in this topic. And it's from, what's the date on there? That's from last year, though. So, yeah, it's there. If you go to the free stuff page, it's on the second row down. It's still there. It's all, by the way, all the videos from ever are on the page. It's just some you have to go to the archive page. But Let's Talk Psycho 1906-11. That's not the date on there, is it? Oh, yeah, it is. Okay. 1906-11. And you can listen to that. But here's a couple of the key slides that I just imported these from there. So this is not, not new today. It's funny. When I go back sometimes and look at a presentation, I'm like, who the heck wrote this? Sometimes. I'm like, really, I don't even remember. It's like, boy, this is really good stuff. And I was like, I don't even remember writing it, to be honest with you. Sometimes that was true with one of these slides in here. Successful weight loss programs. Those who lose 10% or more body weight, keep it off. 1 year is just between 10 and 20%. Do the rest of the people not know or don't understand or can't learn or comprehend the concepts of diet and exercise? Or is there another issue? Sometimes I relate trading to weight loss. I don't know why, because some of the commercials make sense to me in terms of being a psychological issue. Is there anything about technoanalysis that requires the brain power beyond a 5th grade education? There's no debate technoanalysis works, so why is it so hard for someone to do properly? You're in a day trade using a 15-minute chart. How much total time would management decisions take if you timed the total time needed for the decisions to manage that trade? Serious question. You're in a 15-minute chart. You're going to spend most of the day in a trade. How much time should it take you to figure out the management you're going to need to set forth for the next few hours? How much time? Give me some numbers. 4 hours, 3 hours, 2 hours, 1 hour, 6 minutes, 3 minutes, 2 minutes? Well, it's going to take you a little time, but we're measuring it in seconds, right? Seconds, right? So why are we staring at the chart for hours, minutes? Why is your hand on the mouse the whole time? So every second you spend staring at the chart beyond that time is what? In other words, if you only need to decide, okay, I can't raise the stop until I have blah, blah, blah form, and that can't happen for 2 hours or 50 minutes, 25 minutes. I can set a target in my platform, right? So what am I doing sitting here, right? I know not everybody subscribes to this, but a lot of people don't subscribe to that lose a lot. And it's funny how people who lose money have very strong attitudes about what's right. Do you ever notice that in some professions? But you guys in the room, right? When do I leave? Right? I'll sit there and say, you know what? Fire Tower, you're in the room. What do I say? I feel like I'm watching TV, right? Right? Yeah, well, yeah, I mean, I may not be full on some days, meaning I maybe just don't like what I'm seeing, but the point is, at some point I say, I'm not doing anything productive here, right? I come with so many charts, don't like them, don't know what the market's doing, that's enough, gonna walk away, see you later, right? That's what we do. So why are you staring at the screen if you don't know what you're staring at? I call it watching TV, and I think that relates to a lot of people. You should never be watching TV when you're looking at your charts. You should never be sitting there staring at charts and just like you're just watching a movie and waiting for them to suck you into something. It's not how it works. You come to the market with an idea of what you need to see happen. And when those charts perform for you, then you take the positions. When they don't perform for you, you step back, reevaluate, look at other charts, or decide to change game plans consciously over a period of time, right? Reverse engineering, again, this is from the other presentation, but it's the psychological issues. Um, Reverse engineering has you looking for all the wrong things. That was discussed in that thing, but I don't want to go into it here. Your brain's process of selective perception will prevent you from ever changing unless you take proactive steps. Think about this for a minute, guys. And this is, again, this is for me teaching you for a long, 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 long time. And relating to myself to some degree. But we have this thing in our brains of selective perception. We only see what we want to see. We only pick on the things that reinforce our process. And if that's what you do, you'll never change, right? You'll just never change. You just keep doing the wrong trades, and you keep saying, whatever it is that you believe is working. It's why some people think that fundamental analysis works, because the trades could go up, they could go down. They hear something good, news-wise or fundamentally, they go long, and the stock went up. Oh, it works. No, it didn't necessarily work. It was correlation, not causation. Watch for it over time. And a big one, I think one of the biggest things that it comes down to, both in entering and in exiting positions, it comes down to patience. That's where a lot of psychology simply comes down to, is waiting for that moment. Patience is a learned skill. Perhaps the best way to learn patience is to not have patience until you get mad enough to fix it. A la the book New Market Wizards. Two of the things that 25 successful traders had in common, they all got blown away in the beginning. The capacity to accept or tolerate, delay, trouble, or suffering without getting angry or upset. When you understand knowledge better, you will begin to see the value better of waiting, i.e. patience. You will learn patience if you learn knowledge, guaranteed. In other words, patience is easier when you have a clear knowledge of the subject matter, what's going to happen. When you have a good concept of what should happen, what will happen, you're willing to wait for it with confidence, rather than always being afraid you're going to miss it. And finally, discipline and handle the trade properly when it goes in your favor and it goes against you. Confidence gives you discipline. How do you get confidence? Easy, relatively speaking. You get confidence by doing successful trades. And you do successful trades by not messing with them initially with very small risk amounts until you get over the money fear. And the third leg of this, which I'm talking about now, which is psychology. How to get confidence? You get confidence, when I start talking about, by having reproducible results. In other words, you begin to see a pattern, a thing, a way of trading, of looking at a chart that you can identify with, that you were taught, that makes sense, that you really, get confidence in, and you do it, and you do it, and you do it, and you start making money on paper. You make money with $5 or $10. You start throwing $100 at it, 200, 500, 1,000, and you're making money one day, building into something with just a couple strategies that you know and you can execute well. And yes, it also requires, part of the learning process of technical analysis is to always be aware of what's going on. Things can change somewhat from time to time, and that's why you're always looking at your results, looking at what you did. And it's always good to have a couple or three, in my view, favorite go-to type strategies, so that if there comes a time that one is not working as well as the others, right? If you're always shorting into resistance, if we've dropped for 4 months and now we're going up, it may not be the key strategy anymore. Reproducible results. The antidote to all psychological issues is a well-laid trading plan created by the user, followed by pure conviction and checked for proper use. So that is, and I felt like this came off a little boring tonight. You have to let me know. It was hard to avoid. It's why I've avoided doing this one, because it is a hard to explain one. Well, it is a little hard to explain, but it also is extremely important. So, I mean, the summary is very simple. Of these three legs, everybody comes in and at some point gets convinced. If you listen to me talk more than twice, you get convinced that techno analysis is the only way to do things, and it is. The most common stuff for people to do is to read a bunch of stuff on the internet, which is a good start, but then they go trading and they don't have superior technical analysis and they don't do well. And unfortunately, the first concept, oh, by the way, there's one more really important thing. Okay, one more really important thing. But let me do the summary here. Don't run away. Just let me do the summary. I'll be done in 2 minutes. Um, so they learn non-superior technical analysis. They're losing money, and then they just start to think, well, tech analysis doesn't really work. It's just not right. Blah 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 blah. But even when they get to learn it better, the next step that people get to is that they're really good at technical analysis, but their psychological issues, which usually show up in management of a trade is usually the thing that's most overwrought by psychological problems. Their management is so bad that even though they may have good trades on balance, they're not making money, and this is where they get into that break-even area where they just keep breaking even, week after week after week. And if you're breaking even with terrible management, you probably have some pretty good strategies you're doing and some good charts you're looking at, because you're just not able to make the money. You have to make the money from the trades that move in your direction. You have to make good money, big money, or be very consistent in making okay money, one of the two. And I think the final step in superior technical analysis is understanding how math and probabilities play into it, to get to a point where you say, you know what, charts, you've done your job for me. You've taken me to this level. I know what's going on now, and boom, I'm going to short this thing right up here somewhere. And here's how I'm going to do it, and the way I'm going to do it. I have this choice, I have this choice, I have this choice. Worst case scenario, I'm going to lose that. Best case scenario, I walk away for the day. It makes my week. I'm good. I'm doing it. Okay? Now, how do you learn all this stuff? Well, I think it's something that's very important too. Obviously, superior technical analysis, I teach a seminar program. And you may say, okay, well, great, Paul, you teach the chart part of it, but what about these other two legs? No. I teach all three parts of it. And that's what I think is so very important. And in my view, one of the most important things, you heard me mention when we started that for the seminar students, I'm going to have an additional PARD, P-A-R-D next week. That stands for Practical Application and Review Day. And to me, this is one of the keys to learning this stuff, because you can sit in class all day and you can go play on charts by yourself all you want to. But what we do is then take and get all three of these legs of the stool together, so to speak, and look. Find those moments in time. Here's what we learned in class. Here's the last three trades I did in the room. Let's apply what we did. Let's talk about it. And for so many people, that's where I get all the compliments. Just that is was great, because it really reinforced what you talked about. Because in class all the time, I say I'm only teaching you stuff that I use every day. And every day I say everything I do is what I teach. And that's exactly what it is. So tying it all together to me is an important thing. And for some people, you may find that you already have, taken good steps down the right road. You can always feel free to email me or to get together and chat if you have issues you want to talk about, where you're on your progress, or if you have trades that aren't sure. Okay, we're here to try and help people. And I'm done. Questions, comments? Yeah, I actually have an article somewhere on that, Don, about the 4 levels of learning, ending up with unconscious competence. You know what I've always said about that, Don, as long as you brought it up? The most important step is to get to conscious competence. That's where people don't get to. Getting from conscious incompetence to conscious competence is the most difficult thing, I think, for people to do. To be able to have the ability to look and to say, yeah, that's right, yeah, that's wrong. That's kind of that first step. And if you want, in a sense, unconscious incompetence would come when you have the other 2 legs of the stool fairly well handled. Where y- they hear me in the room. I mean, when something happens, I mean, 3 or 4 times a week. I wish it was every trade, but 3 or 4 times a week, I'm just like, oh, oh, that's it, right? It was just a flash, just a picture, just a single second. There's nothing to think about. And like I always say, that's great when that happens. But a lot of what our trading is trying to find that next thing when we just don't have anything for, you can't really not trade. If you're going to sit there and not trade for days, you can't do that. So you do have to find the best that's available. And sometimes it's great, and sometimes the goal is to make the best out of what you got. Those of you who are newer, make sure you check out. I just gave you, right? I just gave you the free stuff page. Make sure you check out the free stuff page. Lots of good stuff there, either preparing for learning or um, until you have time to decide to learn. And what are we doing next year for free? So next week, seminar people, I'm going to send out a PARD, PARD thing. What is this? This is August 12th. Yeah, so I have another event scheduled 2 weeks from today, which we'll be doing. So 2 weeks from today, same schedule. We'll have 24th will be biweekly chart review, and then 2 days later another. And I have like 5 topics. As a matter of fact, I actually started a topic halfway through, and then I switched to this one because I just wanted to do this. I don't know why I have so many topics to talk about still that are not repeats. I actually have a list of 5 things here that I've started. So we'll get together then, and we may, what I haven't done in a while, we may do a Saturday coffee with Paul, not this Saturday, but maybe next Saturday. You guys used to love those, and I haven't done one in a long time. All right, guys, have a good night. 6:10. We'll see you guys in the room tomorrow, or see you if you're on the free events a week from Monday for the scanning night. Have a great one.